way. That's going to be somewhere in the vicinity of 2:30 a.m. Sometimes Forex Factory will put an estimation as to when it'll be. And the way that they hide these Japanese Bank of Japan statements is they put it in the timeline. So we have it after 2:30 but before 3 a.m. But this could happen at any point in time, right? It's an interesting characteristic about the Japs. They seem to like their press conferences on the fly. What a great night last night, huh, guys? London patterns everywhere. You could basically, I don't know what to say. It's just, it is what it is. All right, so let's get us going here. I'm going to start with U.S. dollar, as always, taking a look at the higher time frame. We can see a D1 correction in play. So this is pretty much expected. The only counter to that, of course, is rising interest rates in the bond market. So the yields themselves are starting to pick up after this small little correction. We've seen several of those down here, so this might be one of those. We start seeing some movement higher in the yields of the Treasury market. You're going to see the prospect of a strong dollar. Now, we've seen this type of thing before where we're in level 2 short and the market makers bring it down into level 3. Meanwhile, yields rise up. And so the yields start to take off, and then the dealers finally trap low, and then they run it up high. I think back in one of these level 3s, it probably was this one, we had that exact type of thing. So again, what the market makers are doing oftentimes is they're making price lag the fundamentals, sometimes 2 or 3 days. And so think about, you're a market maker, you know the dollar is going to rise, you'll push back against it before it rises, so you get everybody thinking it's going to go short. And you make them second guess the fundamentals, because if Treasury yields are rising, how could the dollar drop? Well, it drops because the market makers own this lower time frame. It's their arena. Basically what they do is they have a virtual market inside the H1 chart and below, and everything above the H1 chart follows more of the longer term expectations, fundamentals, geopolitical interactions, GDP, all the fundamentals actually make sense on the higher time frame. The lower time frame, it's purely virtual. So what we have here tonight is we have a level 2 on the way down with a 5,200 cross. We're in a possible D1 correction, as we noticed on the daily chart. You can see how it looks like it's an M formation after many months of rise. So we could see that actually start to head down. You can see the close of the day today was a nice red full ADR. So again, we had our peak formation up here. Let me just, I got a 1 missing, so I apologize for that. One thing, it's a nuance of peaks. So you had your peak formation here. That was a close into an AFP. That's why it's black. And then you had a pullback to reassert this peak formation that then gave us another AFP short. Okay, so we're going to see this across a couple pairs as we move forward here. And again, we'll get into the distances and such. U.S. dollar, the pips are a little different. It's a little wacky. So meaning that the derivation of the U.S. dollar is on its own. It's not a synthetic currency, so it actually has a different pip value. You can still measure them. You can still see pip distances, but it's a little different. So I don't always look for 50 pips on the U.S. dollar. I look more for pattern and timings. Okay, so that's why that AFP was obvious, at least this one last night. And again, you had this beautiful little fella right there that drove the entire market. We'll go through this, of course, as it expressed across all of the major pairs, but there was your move. This was also another move, so we had a London pattern to the long side. That dropped some of the majors. And then you had this London pattern to the downside, a very nice one, by the way. Look how clear that is. That's about as clean as they get. Perfect timing at a 0-0 figure. Go figure. And, this is the master pair on the market. So when this does this move right here, you can pretty much guarantee your EU, GU, AU, all those are going to be rising as this is dropping. Okay, and then the USD CAD, USD CHF most likely will be dropping with this. So the master pair itself sitting at L2. And yeah, so let's go ahead and take the picture and we'll move into Euro dollar. Let me just open up my folders, make sure those things lined up. Where did they go? Over here. Okay. And files, H1 chart picks. There it is. Okay, excellent. Quick pass by coffee. Coffee dropping. Nice to see that. So no urgency to go buy bags of coffee, fortunately. Moving over to Euro dollar. Again, this is where we get into these peaks that are reasserted. So again, the close of the day at the extreme of the structure. Look at the pattern here. Look at that market maker cycle. we're dealing with a pair in Eurodollar that's 71 pips, average daily range. So we're expecting somewhat lower than 50 pips to the close of the day for an AFP condition. That's what we got right here. And then it came down, and my rule is that as long as it's within 25 pips of the previous peak, then we have what we would consider a secondary peak formation. We'll just call it a reasserting of the peak. I think that's probably a good word. Let me make my crosshairs darker so you can see that measurement. So pulling it across, that's 15 pips, right? So we can go up to 25 pips normally. So if a piece of the peak is over here, say for instance this peak right here, if it were to come back up into it and it was within 25 pips and yet it was another day over here, that would still be a peak. That's why I have 2 peak boxes here. So we did have a level 1 long until level 2 on Friday. Then we had another one here Monday into Tuesday. Both of them playing out perfectly, mind you. That's what is expected when the dealers are running everything on these lower time frames. That's just what it is. And again, that's why the argument is, do the fundamentals work or is the market manipulated? Yes. Wait, which? Both. Okay, so harmonic at the top edge here that I need to add. Oh, there we go. So harmonic L2 long, outside structure short, 5,200 long. So a lot of level 2s tonight. We do have some AFPs in here. So looking both ways tonight in Eurodollar. Level 2 oftentimes is when the dealers stand aside. In terms of our D1 trend, there's no D1 trend. We're basically starting to see the 8 EMA roll up against price beneath the 50 EMA. So we are pretty much in a level 2 with the harmonic on the outside. Notice that I've got some sub counts plotted out into the future. So watch for those. Those will make for interesting possible London patterns if we get to that third one. Okay, so you're looking for possible London patterns to the short side tonight. You're looking for possible London patterns long. Level 2 is a little funny, though. I need to have something clear. So to me, the sub count is the clearer precursor to the trade. So I'm basically looking for reasons to go short if price runs up into that third sub count here in EU. So placing the template, let's grab the chart picture. Let's open it up and see the chart picture. And then we'll move on to pound dollar. There we go. So fire away into pound dollar. Do we need to go? Yeah, we need to just briefly talk about this. So yeah, it's one of those things where I say it all the time. I'll keep saying it until the outlook changes. Let me get rid of this thing. But we, as humans on planet Chimp at this time, especially when it comes to very important, complex things like financial markets, we think we have to do something out of the ordinary. We think we overcomplicate it, right? As humans, we have a tendency to think we need to see all these different things, right? So we put ourselves in a position of like pulling in so much data. The average first, second, third year trader is inundating themselves, necessarily, I would say, with so much information that it's hard to have a cohesive plan out of that. But as you start out in that area, that's a good thing. You need to take in as much information about the game itself. So you're going to take in everything. When you get further down this thing, you start to narrow what you're looking at. You don't look at noise. And you try to make sure that you stay clear to be able to take setups like this. And that's about as clear as they get. What can I say? A nice high volume on the first leg, trapping through the 50 mid-figure. This was a first leg tap. We call that a type 1B. Type 1 London pattern B. Here's the second leg. Close above the EMA. You're in. And that thing was just pure glory all the way. Now, remember we were talking about, and we showed you, in the U.S. dollar, the exact thing the other direction. So U.S. dollar was giving you all sorts of indications of drop, and EU was a perfectly decent train to ride last night. Hopefully some of you took some of these. All right. So here we go. Let's continue. We've got a level 2, as we talked about, so we're good with EU. All right, so took the picture, and we can move on to GU. Just wanted to show you that setup. That's one of many. They all had them last night. It was a veritable shooting gallery. It was one of those nights where I sit back and just thank God that I've been burrowing in like a crazed muskrat on the London pattern type 1s for the past year and a half, 2 years. It is what it is. So there we go, another one here. This was out both ways. So you saw me hit the one short, and then that was enough. I like sometimes just doing one trade a night. I know that sounds a little, pedestrian, but just I don't know what it is. I like to get my numbers for the day and then go do other stuff. And not that I don't like watching charts, but sometimes you get one trade and I'm done. And that, again, has to do with this idea of building bricks. You're a bricklayer. You're not a home run hitter. You hear that, Forrest? Get that in your head. You're a bricklayer, not a home run hitter. All right. So very nice setup to the short side. That terminated into a setup to the long side type 1 London pattern. Absolutely clear. I mean, again, I try to say it. At some point in time, you want to simplify things down. No need to overcomplicate them. Start looking for the simple stuff, but be very attentive to it. And then do the hard thing, which is actually putting a trade on after you dropped 1 or 2 or 3 previous trades. That is going to be the hardest thing. And Mark Douglas has a great drill for that, by the way. It says take a series of 20 trades and just execute them. Doesn't matter what your system is, but every time the setup shows up, execute it. And it gets you in this habit of being automatic. And there's something that changes in your brain when you do Mark Douglas's exercise of 20 trades in a row that are only technical, that you take no matter what. You just don't think. You're in a situation where you're looking for the rule. Break of the Asia range. First leg comes up, taps 9 EMA, close below, and then closing above. That's one of our setups, so you take that long. And you do it quickly. You do it with haste, right? That's Mark Douglas's trading exercise. I think he suggested an EMA system in his book, Trading in the Zone, that dealt with at least some sort of technical that gets you in. But I want you to wrap your head around the London patterns as being a technical trade, and then you basically hit them automatically in a series of 20 trades. And it starts to rewire your brain because, again, the newbies will think way too much when they first get into a trade. Okay, so here we are. We're measuring this pullback towards the peak, and we're noticing that it's within 25 pips. So then we attach this area with this area to create a composite peak formation across the entire week. So we are in AFP long condition in GU. You've got an outside bar on the daily off of a high volume area. So that's looking pretty nice. We are up against this AFP high volume area as always. These lines never cease to amaze. But we are looking at AFP long. We had H1 TDI extremes. 5,200 is in our favor. Okay, and did we bounce off? Yeah, we bounced off this lower high volume area. So let me add that in there as well. So that's this D1 trap area. So all green in the GU. Now, this was almost an outside structure, but didn't quite give us our 7 pips, just below. So no outside structure on the other side. I guess the only thing to think about is strong dollar here. And again, it's like this across the board. So our fundamentals are basically saying long dollar. Again, why do I say that? Well, that would have to do with the treasury yields. That would be the interest on the underlying paper that is denominated in U.S. dollars is rising. That creates a tendency for the value of the U.S. dollar to go up. Now, the dealers like to throw the false move. So if the dealers drop price in the U.S. dollar, what does that do to the GU? That rises it. Okay, so we're basically looking to play a false move against fundamentals that the dealer might play tonight. Okay, this isn't my favorite AFP because we have already been through one, right? So we had our AFP on Friday. This one looked really tasty. This trade here on Friday was incredible. We're going to talk about that one tomorrow in the DMR session because it was an iconic trade. It was enigmatic. It was absolutely perfect. So we had that move to 1 and 2. We had an additional move here, but we came close enough to the peak to reassociate it. So slightly range condition in GU. I think that's one of the ways I want to just temper the enthusiasm with this pair. Just be aware it could go either way. Not as gung-ho about this AFP as I am many of the other ones that played out, but it's still technically an AFP, so we'll go with that in terms of where we are here. Okay, so save picture, already did that. Let's open the folder, open data folder. And I want to watch these getting recorded. Files, H1 chart picks. And there we go. All right, moving on to Australian dollar and another London pattern. Hey, they're everywhere. I mean, it's a beautiful thing. Oh, was this one? I'm not sure if this one had one. Might not have been. Okay, so we didn't have one in AU. I was thinking about this one here on Friday. Friday was ferocious in AU. Okay, so AU, you can see the step up 3 days of rise. We have 3 continuous days of rise. Now we're getting into the third sub count. So usually I don't include a sub count in an assessment, but in this case I will because we had the unidirectional move for 3 days. So I could have called it level 3, but it didn't quite get up high enough to give me that clear level 3. You can see also we lacked the H1 TDI extremes. So everything about this looks like a level 2, and it looks like a level 2 with a pretty convincing subcount. So level 2 long, subcount short, 5,200 long. And again, we have this D1 correction happening. This would be to the long side. This is what they look like before they start to really correct. So we've got a nice D1 chart there for possible continuation long. If the dealers drop the US dollar further, AU will rise. But I come back down to this H1 chart, and everything about this H1 chart looks like they want to fill this area back to the downside. Therefore, why I'm including in my assessment the subcount, H1 subcount right here. Let me get that over so you can see it. So subcount, that's the only thing to the downside. So really it's a two-way street today in Australian dollar. Let's see how we got in the New York session. So it looks like a little bit of a top edge reversal there. It didn't get that many, but it did come to the water. So that's actually a pretty clear New York reversal right there. Yeah, it was only about 1.2 to 1, I'm guessing, somewhere in that area. I'll have to take it further when the charts show up on the weekend. But that's a New York trade, AU, Monday, New York, 10/30/23. Okay, I'm going to add that to the database, but that is what they look like. Really nice, actually. Your target was the water. So a lot of times in the New York reversals, target is the water. It's actually a pretty nice move. It didn't come down a whole lot. So again, assuming your stop was well above, you got a little over a 1-to-1, but that was a beautiful trade. Again, you were looking at the subcount short. So it was in line with the subcount, which is really nice, which is what we want to see. We want to see some type of manipulation going on by the dealer to create in the mind of the herd some type of false trend. It's basically what they do, right? It's a common idea. The retail trend versus the market maker trend, as Steve taught us. So you're looking at the combination of both of those playing out always, right? All right, let's move it on to EA and GA and see where else we got some more London patterns. And again, it was a rich night last night, target-rich environment, as they would say. And so that's where you are. So this was one of the lazy ones. Yeah, watch this. It's interesting seeing this one play out. So you have the London pattern, but where to pull back to? Pull back to the 0-0 figure and then finally took off. So if you do enough algo work, which I suggest is a 2-year type of outlook, if you go 2 years back in a particular pair and you capture all the type 1 London patterns, you're going to see a handful of them that do this, maybe a little more than a handful. You're going to see some of them that run up and then pull back. They don't take out the bottom edge, though, and they sit there, and then later in the day they move up. And you can see it breach the 618, but the 0-0 figure acted like a magnet for price. Okay, so if you have a 618 that's sitting right near a 0-0, expect price to favor the 0-0 because of the magnetic pull of the 0-0 figures. There's a place where people take trades off and put trades on. So a lot of larger traders will wait for price to get to the exact 0-0 to execute their trades because by the nature of the market, there's a big fat bit of volume that sits right around the 0-0 figure. A lot of volume sits there. And so it's played the same way as the high volume areas. It becomes a liquidity area. And you can see it just trapped inside there and then finally took off again. So it was a valid type 1 London pattern, except it pulled back before it went long. So that was probably, I guess we'd say, the least pretty of them all last night from the standpoint of my higher probabilities, though. It looks like one was able to grab a 1.5 to 1 inside here to not have to wait for the pullback. If you're looking for a 2 to 1, you're going to have to pay the price of time itself. Oftentimes, this zigzag pattern, a 1.5 to 1 in a 5-minute type 1 London pattern, usually going to give you something on the first swing. If you're looking for 2 to 1 and greater, expect that second swing and expect some time added to it. Okay, so now that puts us in level 2. Now I measured, let's measure up here. Well, let's measure it up here. It looks like I didn't measure that one correctly. That's all right. So it does look like an AFP here. So let me make an adjustment. Since we do have 50 pips close of the day, we have a rather convincing multi-week peak. No H1 TDI extremes on this swing, however. So this might be a combo. I did write it down as level 2, interestingly enough. We do oftentimes have counts running both ways, at least I do. And in this case, I think it's valid. So in one sense, it's a level 2 short with 5,200 short. In another sense, it's an AFP long. So I'm going to get rid of this outside structure designation here. Okay, so sorry about the combination count. Sometimes this is necessary. And again, a lot of times it has to do with daily range areas when we get stuck in a range like this. So to me, this is much more difficult to get a bias for because, again, you're starting to see this triangular thing going on. So whenever that is starting to show up, it's an extraction of liquidity out of the market. They're basically participants jumping off of trades, and price ends up correcting back into its center point. And you can even see it here on the H1 chart. You can see how there's higher lows and lower highs. Okay, so yes, we do have, I'm going to get rid of this outside structure because now we have a full peak. We did have the 3 countdown, although it wasn't in the designated level 3. You still had a nice set of sub counts on the way down. In fact, let's get rid of this one because let's use always the latest 3. So EA is an AFP long and level 2 short. So pick your favorite. I don't really think that there's an edge on this one like usual, but again, whenever I see AFP and I see a setup in line with that, I'll take it. So that's not to say that I won't take a type 1 London pattern on the long side tonight. I will, but I'm a little tempered by this L2 short as well. So I guess that means it, but I wouldn't trade against this peak. So I am long this pair, even though it's very rangy. So that's, I think, probably a good thing to establish. That might be a better way to look at it rather than the L2. So let's just take that ambiguity out. So range condition and AFP long. That's, I think, more accurate. Okay, so that gives us chart picture. Not that. We save the template. Yep. And let's move on to Japanese yen. Now, remember, Japanese yen has tentative Bank of Japan press conference tonight. Let's go look at the, whoops. Oh, sorry. Ran ahead too far. Let's go to GA. Sorry about that. GA, another night of wider London patterns. Again, this is a different type of London pattern, type 1. It's still valid. It fired later, pulling fib always from the low of the day. Okay, so there we go. So we came back into this 618, deep back into it, and then it rose. So this is the hardest part about taking London patterns late in the day, is that they do have a tendency to pull back hard when it comes to the New York session. When we get to gap time in New York, there's a lot of liquidity that enters into the dealer's ability to move price. So basically the dealer grabs that liquidity and he'll push it an opposite way oftentimes as to where the real direction is. And you see it, perfect example here. Session beginning, false move, pulled it down really hard right in front of 9 a.m. and then pulled it back down again here, looking at about 9:15 a.m. and then finally it rose out of there. So if you did take this wider type 1 London pattern, which is extremely viable and will definitely be on the database here, GA, Monday, London, 10/30/23. That's a very good pattern, but you have to always anticipate what's bound to happen in New York with the dealer throwing the false direction. So for that reason, it'll break the 618, and you kind of expect that. So again, playing these past the 1.5 to 1 is going to require time and most likely the zigzag pattern. Lest I say an ABC, but I don't really like to do that because it gets people thinking Elliott wave. And to me, Elliott wave is a deceptive thing because the whole complete picture was never completed. But you could see why, right? All right, that's a Wyckoff thing, and why didn't he go all the way? And he didn't talk about the dealer side. So it's almost like if I give you 90% of the truth, but that last 10% that I hold to myself is super important. It doesn't matter that you had 90% of the truth because with that little 10% that I hold, you're going to get smunked. So that's why a lot of the systems that look similar to the market maker cycle and be a little Elliott wave looks close, but it's missing that induced trap shift component. Which I don't fault them. I guess it's Steve was the first one to go public with that kind of idea, and I guess he was the canary in the coal mine, and he wasn't messed with for it. So for whatever reason, it was okay to talk about it finally after 100 years of doing this stuff, or actually 200 years of doing this stuff. Anyway, sidebar. With that, no need to go out into all these older trading systems, but Elliott wave is, I think, deceptive because it's missing that last 10%. Anyway. Another discussion at some other time. Go ahead and save this template as we are. I don't think I made any changes, but just in case, we'll save the template. GA. Just be very careful mixing systems. Try not to do that. It'll just confuse you. You're going to be overloaded to begin with this method. Don't try to bring in other stuff to try to, get an advantage. I think that's where a lot of people, it's funny, I've seen that. And again, that gets into your confidence level. If you're super confident, you don't need to do that. And when you lose confidence, I need an indicator, right? And I kind of half humorously talked about it being like a nipple, right? Like your binky. I need my binky. There's my extra indicator. I need my binky. No, you don't. All right. UJ. Now, we're talking about Bank of Japan press conference coming out somewhere between 2:30 and 3. Again, look at the clear sub counts on the way down, spike at the end of the day, and then up. I believe the UJ has been putting in monster. Didn't do it last night, but it puts in some really nice London patterns. This one was great. This one's short. We're going to look at that tomorrow night, but it puts in some nice London patterns. Because of the Bank of Japan press conference, I think it's off limits right at the start of London. Maybe something later in London will fire off. Now remember, we're measuring to the close of the day, so that's why this is not an AFP. It's not the close of the day, although you do see 50 pips of distance from that spike low. So in some senses, it could act like an AFP where it pulls back against the peak and then rises. But again, the Bank of Japan press conference makes it basically a no-go. They'll come out and do whatever they do. And oftentimes with these types of rate decisions, they move things so much that it messes with any previous level bias. So this level bias might fall to pieces after that Bank of Japan press conference. I would not be surprised at all. So what can we make out of the price? You can see that we're possibly getting into a D1 correction here. We could see many, many months of rise, almost, dare say, years of rise. If I squint the chart down, we do go back into 2022. So a long bit of rise. You can see the start of an M formation. We can make the case of a possible correction to the downside. So that would actually be this guy right here. And it's very difficult to say that with an interest rate of negative interest rate against a positive interest rate, right? 5.5 positive and minus 0.1. So that's actually usually going to create a carry trade situation where money is borrowed in yen and invested in high yield securities, good yield, we'll call it consistent yield, safe yield securities in these other nations, right? That's what the carry trade is. So we can see the possibilities of people borrowing in yen and investing in the other currencies that have a 5.5% interest rate. So that'll have a tendency to lower the value of the J and increase the value of the U. So from a fundamental standpoint, everything is geared towards UJ rising. But we've seen the Bank of Japan already come in and step on price. They even did it, I think, a little bit here today. That was out of nowhere, and it was a big fat stick down. It had nothing to do with anything. Else, there was no fundamental news in there, and it just dropped hard. So we could see this type of thing translate in what the Bank of Japan says in their verbiage. Okay, so stay out of this pair for now. It is level 3 with an H1 TDI extreme and 3 times ADR condition. It's off of a high volume area that's an AFP back to the left. So from a market maker cycle standpoint, this looks like it wants to rise. With the caveat of there being a D1 correction involved where the Bank of Japan might want to push it back down. So wait for the Bank of Japan to come out and then reassess your UJ. So I'm not seeing tonight as being a very clear direction in UJ, again, because of the Bank of Japan press conference. And remember, Forex Factory slotted that thing between 2:30 and 3. So somewhere inside here will be that press conference, perhaps. And watch out for J pairs during that time as well. Okay, so don't be getting in GJ at 2:15 or so. Okay, so that's UJ. We took the picture. We saved the template, and let's move it on to our GJ. So GJ is just a rock star pair. I don't know what to say about it. I love this pair. Now it gave an M1 trap through last night that was just delicious. If I were still trading those as I was before, this would be 100% gimme. But I was in the easy one, GU short. But this one, again, this is that's like a 7-1 right there. If you held it for even longer, it was a bit more. But you can see the trap below the 0-0 figure. In fact, let's count the high volume area. Let's count the breakout traders that were sucked into the short side. Okay, so let's walking this through. So you had your 1, 2, 3 down. There should be a little yellow guy down there. Yeah, there is. So you had your sub count happening. Once it broke below yesterday's low, you were on the lookout for a sub count reversal. You were at this previous low of the week. You had many days of drop. You're looking to reverse this thing back long. And so you see the first break of Asia is the first set of breakout orders. Then you had a break of yesterday's low. That's another set of breakout orders. And then you had the break of the 0-0 figure. So that's a third set of breakout orders. So this is what I love, is when I see at least 3 groups of breakout orders at different prices, all being sucked in the market, and especially when the dealer gives them a little bit of a line on the fishing rod, right? Let them go off with your bait a little bit to get the hook sunk deeper in, and then that was your set right there. M1 trap through 0-0 figure is what that is. I used to take these constant. I love this pair for M1 trading, and that you're looking at it right there. I mean, I could just leave that chart up for. I could make that a screensaver on my computers. I've seen this so many times, and it's so great. And again, your first leg was possible here, but you never did get a second leg. Look how it filtered out any possibilities. No second leg. Came down. This is so much lower that it's not a second leg. This then became your additional first leg, and then they did give you the second leg. And look at the zone flips on the way up as it charged higher. What a great pair. Again, you were in this sub count to the long side, so you're waiting for that to snap back, right? Like a slingshot almost. Okay, so this is giving us 50 pips to the close of the day on the long side, and we have 50 pips to the close of the day on the short side. So we have one of our dual AFP conditions in GJ. We've seen this before with GJ. This pair does produce this quite a bit. I think a lot of it has to do with the extended average daily ranges in this pair, but we have an AFP to the long side based on that level 3-ish kind of reversal. It's more of a sub-count reversal. It never got to H1 TDI extremes, but it did pull back to this previous area and trap through it. So that was an additional breakout set that I didn't count back here on the M1. So on the M1, there'd be another one down here. So there's a fourth set of breakout orders that were sitting right down here. So that was even better. So that gives us an AFP to the long side based on trap volume that got stopped out on this move and this move. But we also have a close of the day that was extreme. Well, not extreme, but we had 50 pips or greater to the close of the day. So AFPs both directions. Okay, and a lot of times we see this actually play out. So let's just draw out a scenario. So we could see the first one play out where it runs up, and then that one comes down, and then they give a trap on the bottom edge, and this one works out as well. That type of thing happens quite often. So we could see away from peak reset working out, and then we can see an away from peak off this bottom edge also working out. That does happen where they play out both directions. Now the dealers are working trap volume on both. Dealers are working trap volume all the time, but they're really working it strong here when you see these corrections back into the middle. They're holding traders long here, and they're holding traders short here. They're also holding the minds of traders that got stopped out on these moves, and that's actually where most of their bait comes. Not bait, but that's most of what their ammunition comes from for their kill shots, is people re-entering trades. Not so much holding trades, but re-entering them. So GJ, AFP both directions, 5,200 head long. D1 downtrend, interestingly enough. We're barely in it, so this could easily change. You can see we've been sideways for quite a number of weeks here. So that's the only caveat to that D1 downtrend. It's a little bit rangy for my taste, but price is below the 50 EMA, and the 8 EMA rather, is rolling over. So we have for ourselves a combination dual bias tonight in GJ. And what a great M1 trap through the 0-0 figure long last night and off of this high volume area. What a pretty picture that is. Okay, so let me just in case I didn't save it, I'll save it one more time, and then we'll move it on. There we go, GJ, and we'll go to Canada. All right, moving on to Canada. You can see that we were in a strong level 3 condition all the way up into 3 times ADR. We just got our 3 times ADR. We have H1 TDI extreme, so everything about this looks like a good market maker cycle. By measuring from the top part of that peak to the close of the day, which closed at the extreme, we can see 50 pips. Okay, so AFP condition in USD CAD basically all red. 5,200 headed short. It just rolled over to the short side recently. And we had 3 times ADR H1 TDI extremes behind the peak. Okay. And as well, we trapped off this 138.62 high volume area. So a lot of red in there. Do we see an outside structure? Doesn't look. Do we have 7 pips down here? Oh, yeah, we do. Actually, so we do have an outside structure on the other side of this. So let's get that in there and we'll savey. So the USD CAD, a little sketchy in my opinion, because you have to bring in oil. So oil is going to be a factor tonight. And oil actually is a big market. So we want to go analyze oil in terms of the solidity of this AFP. But we did actually point out a outside structure to the long side in USD CAD. So let's go look at our crude here. So yeah, oil making new lows, correcting off of the hysteria of the Middle East stuff. So yeah, sad to say it. I don't have a. I could see oil continuing down. I know, and part of the reasoning for that is that the dealers love to take it back into these round figures. So when you're between the 75 and 00, it basically likes to hunt those. So we could easily get a drop down into 75. We've mentioned it before that U.S. oil production, basically largest it's been going back to 1983 by maximizing wells and increasing drilling productivity rates. So we're not seeing upward pressure in the oil market like we normally would during the signs of this Mideastern kind of thing. So that a lot of times, usually oil does get really pricey in that case, but we're making a lot of it, even though there's been executive orders to shut down new drilling. It hasn't affected all the drilling that Trump bought online while he was in. Okay, so here's natural gas. That's looking real low. Let's look at gasoline, domestic U.S. Okay, so that's dropping. So gas, domestic U.S., $2.22 a gallon. Of course, put in all your taxes and all the middleman stuff that goes in there. But we could see that the oil market derivatives are dropping too. So not exactly excited. Okay, so now 60% of the time, if oil drops, right, you know what CAD does. So again, outside structure, not a peak. You're sitting at a zone flip. You're just getting into D1 trend. We could see oil roll over to the downside. Okay, now oil rolls over to the downside. What does CAD do? 65% of the time, CAD will rise. So be cautious about this AFP, ladies and gentlemen. Don't be extremely over eager to take any type of short trade that's there. It's got to be really clear. And then definitely watch the oil market tonight if you're trading USD CAD. I think it's going to be a big help for you to see what type of pattern shows up later on. And so I do have a template in my setup of templates where you can go and look at this stuff. I think I'm missing EMAs here on this one, sadly. But look at that London pattern that came to Asia midline and then dropped. So you can go into that folder and find them. So I'll show you where those are. So the oil template would be in miscellaneous, I think. WTI crude right here from FX Choice. So it's, or Hugo's Way, either one. So there's your template if you want to load that up to watch oil to help in your assessment of CAD tonight. So again, we're going to see what side of the market the dealers place the London pattern and then see if that lines up with our CAD. Okay, so there's USD CAD ready to go. Let's head on over to Euro Canadian. And Euro Canadian is in level 3 with an outside structure short. Strong D1 uptrend here. So D1 trend to the long side. So D1 long, 5,200 headed long, but pretty much a clear L3, an extended L3. We did tag our next 3 times ADR. So this was our first 3 times ADR. Here was our second one. So we're dealing with H1 TDI extremes beyond 3 times ADR condition, getting somewhat close to our high volume area, but not quite to it yet. So this brings up the prospect of long trades. Look at this reversal off the zone flip right there. Is that a pretty sight or what? And again, last night, it was just one of those nights where I just try to tell people, wait for this stuff. Don't try to overcomplicate it. You don't need to bring in all the complexity you think you need. Because if you just wait for these perfect setups, I mean, what am I going to... I mean, it's... Wow, that's going to be a fun one to cover next week to get into charting and projecting zone flips. Because remember, that was a very strong zone flip right there. you're in line with D1 trend as well. So no shortage of trades last night. I mean, it was just crazy. And again, I love Mondays for this very reason. Monday was an extremely productive day in my algos. It was the second most productive day. I think Thursday was the most, and then Monday was too. So it'll vary depending on which pair and which signature trade, of course. But I love London patterns on Mondays. And that you wouldn't be able to get me away from trading Mondays in London patterns, which a lot of people call Sunday. I get it. All right, so with that London pattern bouncing off that area, do we have 50 pips into that close of the day? And yes, we do. So small prospect of a peak reset there. I really don't want to confuse this one, though. I think you could trade either direction. I don't want to bring too much to it. I'd rather keep it as a level 3 with a D1 long trend than outside structure short. But we do have the prospect of this obviously pulling back and rising. You've got yesterday's day open price where it might pull back to. Looking for reasons to trade both directions tonight in EC. Okay, D1 long trend is valid. L3 short is valid with the outside structure. Looking both ways tonight in EC. Pretty sure I saved it, but I'm going to save it one more time, and then we'll go ahead and take a picture of it and move on to USD-CHF. Okay, so what a gorgeous trade long last night off of that zone flip. Again, get in the habit of getting in front of these. And again, that has to become a habit. How do you get in the habit of getting in front of zone flips? You have to make it a habit. So habit formation, that's really a good topic for a future DMR. And everything related to it, which is repetition and emotion. I think I've talked a lot about that in the Mind Camp section in the forum. Covered that pretty heavily in sensory input triggers as well, which is a couple of the videos in that section, where you create such a strong emotional attachment to a visual that involuntarily, if you see a setup that looks similar to that visual, it immediately fires off and you get that impulse. It's almost like a robot gives you that green arrow, says, all right, do something here. And then you analyze the charts and you make the determination if you're going to actually trade it. But just putting those sensory input triggers in as a kind of an automated subconscious trigger event is really helpful. Okay, USD CHF. Let's start from the daily. Daily, we're in a D1 trend. You can see prices above the 50 EMA, and the 8 EMA is headed higher. We do have the little pin bar off of that AFP reset to the top edge, so a little bit of reason to be thinking short. And that would, in addition, be because of our nice sub count 1, 2, 3 up. So really nice set of sub counts there at a high volume area, actually sitting right between two high volume areas. We didn't get the close of the day of 50 pips. Didn't even get close. Our pair, in this case, is 58 pips average daily range. So one could make the supposition that that's an AFP short. Little hesitant on that because the U.S. dollar is L2 short. And another thing to point out with this U.S. dollar that I want to make relevant here now that I'm looking at it fresh. I do see a little bit of a sub count that had been completed there. And again, any sign that I could see of these fundamentals starting to show in price, that changes things. Okay, so sub count long in. I just see a completed 3 to the downside at a high volume area. So let me just resave this template in that case. So again, the fundamentals are saying strong U.S. dollar. Yields are back into rising mode again. Okay, yields rising creates an attractive underlying currency. We know that. We talked about that before. So this is what we would say is the fundamental direction would be long U.S. dollar tonight, but the dealers might push it down in order to buy it. Okay, so false move before the real move. That's what they do. They make a living doing that, and a pretty good living at that. And you can too, by following what they do and not making stuff up, not having to reinvent the wheel. It's another caution to new students. You think you have to come in and like reinvent things and make your own signature trade? We've been doing this for a decade plus, so I wouldn't be too apt to really completely self-generate a signature trade. I would, however, look at making it yours. And you do that through the algo, which is looking at wins and losses enough that it desensitizes you from the wins and the losses. So you're able to actually hit trades when they show up and take the hits when they hit. Okay, so outside structure short would be the one way that I'd look at this. I could almost go for AFP short, but it's not quite enough of a distance. So outside structure short, L3 short. We're not quite the 3 times ADR condition. We are, however, in a D1 long trend. So this would be another pair that looks like it's trading both ways, that I'd be aware of it both directions. We're barely in this D1 long trend, by the way. So very, very slightly in it. We've just gotten above the 50 EMA from the daily. And the 8 EMA, of course, is cooperating, pointing higher, but you got the pin in the other direction. So, again, this is a dual bias, I think, tonight. And let's dig into this thing and see what we got up at that AFP reset trap area. And lo and behold, you got yourself a London pattern up there. Now, that's definitely not an accident. In fact, there were 2 trades in this pair. All right, that's a beauty right there. And again, coming into one of these high volume areas. Wow. So you had an H1 subcount condition that ran into this. So let's add this one to the list. And last night was insane. And again, October is just crazy. Rocktober is what you could call it. I know that's an old MTV term, but in terms of Forex, October is Rocktober, no doubt. There's an M1 trade inside here. Let me show you that one. So that was rather tasty. These are doable. Again, they're quick trades, quick pop for 2 to 1, right? M1 trap through yesterday's high, yesterday's low, this blue tracer, right? There's your M formation. Down you go for 2 to 1 into the Asia midline, and then that was it. And then you waited to reload for this next beauty that came along that was at this high volume area that was on your chart, presumably. Let's go have one last look at that. Just, again, learning to make sure that I am accurate in my assessments. Let's go have a look at last week's H1 chart pictures for USD CHF and see if that one was in there. Where are you? Where did that open up? There it is. Okay, so USD CHF was this one right here. Okay, so was that in there? Let's see. So we had the peak formation, and we had the L3 reversal, so we were looking for long direction. It did give us long, but this looks like this price was not quite in there. This was our peak low, so we didn't quite have that one. 90.42, that was way up above. So it was as the week progressed that one 90.42. Wow. So wait a second here. So I'm on the wrong pair. Sorry about that. That's the US dollar. Oopsie. Okay, here we go. There we go. So it was up there for you. Okay, we did have the peak. So we're looking for a peak. A little outside structure posing, but that peak ended up being the low of the week, and then it marched up. Remember, we projected out our 3 times ADR, and then here's your 94.22. Okay, 94.22 AFP reset there from last week. Ended up being the anchor point after just a straight move right up to give you that beautiful London pattern short off of that high volume area. That's the type that you want. When you can see that type of confluence, you're in a high probability state. But again, last night was pretty amazing. High probability setups all over the place. So let's grab the photograph here. Okay, we got that. And let's take any questions if you have them. So that will complete our pre-market assessment of things. I'm late. Was doing the high-low. Dave was late. Dave was doing the high-low drill. Good for you, brother. Hopefully you're in GJ doing that. Were you in GJ doing that? I would have been in GJ doing that. With that AFP both directions. Let's just check our template out. He's late. If you're ever going to be late, that's the best excuse you can have, brother. I'm doing the high-low drill. I missed your DMR. Yeah, good. Rather you do live chart work and listen to the recording, man. You can speed me up and stuff too, which makes it easier. So, it doesn't look like it really grabbed, but let's see what it did. This would have been what I'd be interested in if I were doing the high-low drill. And again, part of the high-low drill is learning to take the hit and come back in, right? So it's not like you're out of this thing, but somewhere in there would have been trying to grab that piece for the high-low drill. So nice to see you, Dave. Glad you could join us. Here's our daily trade organizer with all our pretty pairs on it. Okay, GU is all green. Do you still narrow down your focus in this method, or is D1 trend needed? Let me try to unwind that statement. I might need to take a sip of coffee before I fully go into that one, Adam. Let me just put that up there for everyone to have a look at and make good on my coffee thing here. So yeah, keeping the Western time is really the hardest part of trading. How to stay on London session. Let me know if we need to recover that. I had to wake up during the day today, which sucks horribly. But then I went right back to sleep. Didn't sleep right away, but still, keeping this schedule in the Western Hemisphere is a really tough thing. So if we need to cover more information on that and how to do that, I'll gladly do that. All right, so GU is all green. Yes, it is. Well, no, it's got range. Okay, so Scratch that part. It's not all green. Okay, range condition. It's a strong factor. Remember, I had red in here. I had the level 2 short. All right, and I changed it to range, but I could easily go with the level 2 short also. In fact, thanks for telling me this. I'm going to just do this. Whoopsie. I don't want to assume all green. Okay, there we go. So I'm glad we talked about this, just to keep the perception and managed. Okay. So there you go. Do you still narrow down your pair focus in this method? Absolutely. Every day I do. Now, we talked about this before, and my narrowing method is actually kind of backwards. So what I do every time before the session starts, and I like to do it early. So I like to do it somewhere in Asia. If I'm not trading Asia, which is most of the time, if I'm waking up during Asia, I'll do a full out what we just did right here, basically at the same time that we're doing it here. I'll do a nice high volume areas. I'll do a projection, all that kind of stuff. Then when I come back on the charts live at 1 a.m.-ish, somewhere between 1 and 2, I'll have another look at the levels and oftentimes fill in the sub count. And so that helps me get a little better of a narrower picture once I get the sub count. Okay, if I see a couple sub counts that weren't showing up prior, I'll have those in there, right? And so that helps me refine the pairs. And then the third level is when I wait for the type 1 London patterns to play out. I basically have a matrix of 14 pairs showing, 14 little square charts. So it's all the pairs at once, and I look for the quality of the London patterns. And so I'll see 1 or 2 forming at the same time, and then I'll go look at the higher time frame attributes of those pairs, which is easy to do with all the monitors I have. I could just basically call up that instance that has, for instance, the GJ or GU on it, and I can see what the higher time frame picture is, and then I can quickly compare it to the other pairs that are showing pretty clear type 1 London patterns. Now, to get really proficient at London patterns, you should also be looking for first legs. And if you go through my London pattern deep dive series, you see that the first legs are the start of this filter down process. So I'll see a bunch of first legs, and then it'll start to form which ones are actually creating a second leg. A lot of times, as you know, the first leg turns into a false move, and it becomes another first leg starts later as price moves deeper. So you start that filter process even in the 5-minute chart tapering down. But this requires a lot of screens, right? So what I like the LG widescreens. I can get 3 pairs on that, and then a standard 1920 by 1080, I could only get 4 pairs on that, right? So that's the rub. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, and then I have another set on a laptop. So then there's another laptop that's a 1920 by 10. Actually, that would be this 1920 by 1080. And then I only watch 12 M5s, to be honest with you. So I take a piece of one of my other additional wide screens here. Right, so I take a piece of that one, and that is where I have my last pairs of M5. So M5 matrix is what this is. An M5 matrix is basically a bunch of pairs on the computer at the same time on the 5-minute chart with a small zoom. I use the tiny zoom, and I try to kind of declutter it. And so that, 2, 4, 6, 8, 10, 12. Yep, so that's it. So those are the 12 pairs I watch. And I've got USDX over here. It's a widescreen. To be honest, this whole thing is, to be clearer, it would be shifted like this. So I've got these 2 LG widescreens, which are the cheaper ones. They're actually really good. It's instead of a 1920 by 1080, it's like 2440 by 1080, something like that. So there's a laptop off to the left with a standard 1920 by 1080. Then I have these 2 LGs that are both widescreens, and they facilitate me being able to get more pairs on at any given time, so I could actually watch a lot of stuff on that screen as opposed to this one. And so there is your pair matrix lesson. But this is, again, your process is important. So this is part of how I filter. So I'll wait for clear London patterns to show, and when something does, I then go back and look at the higher time frames. And I've already got all this homework done, so I'm able to see where the high volume areas are. I've got my assessments. I can instantly see which pairs are in D1 trend. And I put that stuff on my charts, by the way. So I don't use the daily trade organizer in trading. I put it on my charts. But for you guys, it makes sense to lay this all out in a way that's easily conveyable. Hence why I use the daily trade organizer for that purpose. Okay, so M5 matrices. So LG monitors, these are These were relatively cheap. I don't know what they go for now. Is their lower model? I don't know which. I have to go do a little digging on the actual model, but they're, definitely under 200, I think, each one of these. But they're wide, and I put them side by side like this. Okay, and then the laptop's here, and then 10 screens above. I know that sounds rather extreme, but I guarantee you I use them. Okay, so there's your lesson there, and that's why I hope I got you through that filtering down process. So that again, when you get further down into this thing, into this trading thing, your process is going to really define what you're doing. And so I strongly urge you to set your charts up in such a way that it supports your process, and the process should be a funnel. So you need to find a way to go from a lot of pairs down to a few pairs. And I say a lot of that is dynamic. There might be something that you miss in your check down. That's why I don't rely totally on the pre-market check. I do, again, a secondary check for subcounts and then a tertiary check when I'm waiting for the London patterns, and I put all 13 pairs up. Now, when I say 14, what I mean is that I'm watching oil and US dollar as well. I just don't do 5-minute charts for those two, at least not on that matrix thing. But that's the 14 that I watch. But you're going to be filtering down as you go. So that's the way I like to do it, is kind of keeping everything viable. I guess we'd say when you have enough screens, you could be watching all those pairs at the same time. You don't need to do as much filtering. When you have fewer screens, by necessity, you have to filter down because you'd be inundated with clicking through all the screens to get there. So again, that's just it's a great question, Adam. I hope I answered it. All right, let's see where we are here. I was in AU. Yeah, awesome. Okay, that's what you've been studying. So AU, okay, Dave, great. So AU is actually a really good pair to look at for Asia. The central bank is open. It's an easier pair to trade because it has less, I guess, volatility to it. So it's a lower volatility pair. Pardon me. And so I do think that you'll have a good time with it. Now remember, the experiences are why you're doing the high-low drill. You're not doing it to be right. And that's hard to teach that, hard to say. Dude, step up to the driving range. I want to see how your stroke is. I'm going to stand behind you as you take drives, and I want to make slight corrections as you go. And so that's basically what you do on your own with the high-low drill. You're learning your platform. You're learning lot sizes. You're learning to aggressively get in. You're learning what it feels like to aggressively get in. You're starting to become comfortable with the idea of what it looks like at the high and the low of the day, and you're focusing on it. And yeah, you're going to be wrong 75% of the time, and then you're going to be wrong 65% of the time, and then you're going to be wrong 55%. It's going to slowly diminish as you do it. And that's there's nothing that's going to, just imagine you're going to a golf lesson, and the only thing they don't do is practice at the driving range. You think you could learn to play golf? You can't do it. You have to practice the actual skill of putting trades on and assessing price, even on the smaller time frame. Even on a pair like AU, which is a slower moving pair. But I'm glad you're doing the high-low drill. Excellent. Okay, I do have a couple questions. Do I email or Skype? Always Skype me questions, guys. Email is just so 90s. Skype is good because I can see what we've talked about up the chat, and we can post pictures and files and all sorts of fun stuff. It's more real time. I like the Skype thing where if I send an answer to a question, I see you typing, I hang out and wait for you to type back to me. So that's why I like Skype. It's just a little more interactive. That's where you go to questions, Dave. Question number 2, when to use the full daily trade organizer or abbreviated version? Yeah, that depends. As you're learning, you might want to use the full one. And then as you get further on in your skill set, you might want to use the truncated one, which we've talked about before, which basically just shows D1 trend, level 1 AFP and sub count. I might want to add D1 correction in there. I think that's probably the next evolution of it, because D1 corrections are pretty good in terms of a higher time frame attribute. And we do have a couple of them here tonight, so that might be a good idea to add that in there. So I'll go for a V3.2 here shortly, adding that D1 correction in there. But this is just a shorter window into what are the basic overall higher time frame confluences happening at the time. So yeah, I do encourage going to the smaller one. But at the beginning, you might want to stay on this one. Now, the other thing this one doesn't have is that does have subcounts. Okay, so I would add, the way I'll do it is I'll add another line up here. So, and let's see here. Okay, so you got one more question. Let me just do this quickly. I like to show as much Windows Paint work as possible because this is such a great tool for trading, for markups, for everything. So anytime I can do this in front of you, I tend to like to do it. So I'm going to just take this and duplicate it. And I'm going to drag it down here like so. Okay, so I'm making another line inside here. And basically what I did was I circled the area, held the control key, and then dragged the area, and it created a copy of it. So let's do it on an object. Hold down the control key. Okay, so first step, bracket the area. That's your select tool. Select the area. Hold down the control key, and then drag away from it. And that'll create a copy. If you ever need to erase something, create a selected area, and then drag across into it. Okay, so what I'm going to do here is I'm going to do that trick, dragging across. So I'll be able to get rid of everything and still keep the layout as it is, because that's going to be our D1 correction that we're going to add. Okay, and you can take it down into the lower one a little bit. It's not going to hurt. You're just going to blend it. So there we go with that. And now let's go back to our daily trade organizer and let's get that text off of there. And with Paint, you can copy back and forth very easily. So select. I'm going to go D1 correction. It looks like it's a different color than the other one, but that's all right. I'll try to get it about the right size. And then you go copy, come over to this additional one, and then paste. And so D1 correction. So what I'll do with this is I'll simply retype in the letters just to make it look a little cleaner as it is. So D1 correction. Make it just one tick smaller, I believe. And now we'll have that additional area. So, and I'll post this immediately. Okay, there we go. It looks like, yeah, sizing is pretty decent. Let me do this. So you can zoom in like so. And now if the background, let's grab the background here. So I'm going to take the dropper tool. I'm going to grab the background. You can see I made it actual. Oh, there we go. So grab the background, right? So grab the background with the dropper tool. Come over to edit colors. Add to custom colors and hit OK. And then I'm going to call up that color in the second box. When I call up the color in the second box, no matter what I drag, the background color will be that. So all I'm going to do is just drag this level 1 thing up, just make it even, right? So you can drag it around. The background color is now matched. So a little Windows Paint lesson. Again, I don't think there's any reason not to thoroughly master Windows Paint. I think it's a fantastic tool, and I would highly suggest everybody get really good at using it, because you can take charts in and out of the WSN viewer into Windows Paint and do really good work on them. Okay, so there we go. So now that's our updated 3.2. And again, this is a great tool. I had no idea. When I first came in, I saw Steve using it all the time. I had never been exposed to Windows Paint. I ended up falling deeply in love with it because it becomes real quick. So look at this trick. So what I want to do is I want to slide this 2 over into this 1. So I'm grabbing this whole area and I'm including this space over here to the left. I'm going to hold down the control key. So it's basically copying, and it's basically like a copy blank space over with it. So I am avoiding another move, okay, by doing that. Okay, and then let's do the same thing we did. Select, drag across, that erases it. Now let's tighten this down. And now let's do our new date, which is Happy Halloween. I guess we're not quite there yet. We're 10/30/23. Like to always keep the dates on hand for this kind of stuff. And again, we could do that same trick I did before, which is where you grab a bunch of stuff to the left, so it ends up covering it over. And then I hold the control key down, and then I slide it across, and it covers over it. Okay, so a little Windows Paint lesson. Let's save this as DTO 3.2. Thanks for asking, Dave. Use this upgraded version. I'll put a link for it beneath the video. And I do, again, see D1 corrections are sometimes really solid. Okay, there we go. So next question from Dave. I think it's, okay, sorry, lots of questions. No worries. We can take this off. No, I don't need to take it offline. Put it right here. It's better because I can do this stuff. Okay, GJ. All right, you mentioned GJ, and I was in AU. Should I look for the height of the Asia box as a clue on which pair to look at? Yeah, that's a good question, Dave. I don't know. To be honest with you, I haven't had as much experience trading Asia as I have London. I don't think the distance of the Asia box is going to be all that meaningful, really. I think it's the condition that it's in on the H1 chart. I just saw GJ as being set up both directions. That's why I like GJ as a contender for the high-low drill. Again, just also GJ has the J part. So the J is, of course, open. The Central Bank of Japan is open during the Asia session. So, yeah, that's the only reason I was looking at GJ. I don't think you're going to get all that much out of the size of the boxes, really. But here's your sub box. That's a pretty good one. But again, we're in a dual bias here with GJ. We have AFP long and possible AFP reset short. Now remember, this AFP reset short goes away once we clear this. If we clear this, it goes away. But they might still be trapping short here. Or rather, trapping long to take it short. Oops, sorry. Let me put it back there. Okay, so yeah, let's finish your question. So the height of the Asia box, I don't think that's necessarily meaningful. Or at what was happening prior to the Asia box. Yeah, you need to look at the higher time frames. But again, the high-low drill in Asia, really, it's you're going to have less of an established board at that point in time. You're fresh in the day. So I'd be looking for the pat. I mean, really, the essence of the high-low drill, to me, at least one of the things I started to really grab onto, was the idea of the market maker cycle on the micro scale. And so for me, I guess the gateway into it was really on the lower time frames, looking for this kind of thing. So that's the one thing that I want to point out as a plus for it. Again, multiple time frames, right? I like it perhaps better on the 1 minute chart during Asia, because during Asia you don't have nearly as much volume, right? So this kind of thing, this kind of little 1, 2, 3 on the 1 minute, maybe on the 5 minute, but mostly on the 1 minute chart would be how I'd go about it. And again, you're looking the other way too. So the market maker cycle is one of the things you look for. Of course, 0-0s that trap through there. Review my high-low drill lesson for the M1 microcycle series, so you're able to grapple on with all of those aspects that were parlayed to you. Again, the high-low drill, super clearly stated. I have it ideal to get on in London and New York during the gap times, but you could easily do it during the Asia gap times as well on pairs that have central banks that are open during that time period. So does GJ have one of the pairs, does one of the currencies in GJ have a central bank that's open during Asia? Yeah, the J. All right. So we're coming up, of course, to Bank of Japan press conference, which sometimes will attenuate movement until that news comes out. But that's a pair that you could focus on. So again, you're trying to enter near the high, the low of the day. One of the best things that you're going to find that gives you a clue to that is going to be this. All right. A lot of times on the M1, I'd love to see a trap through the 0-0 figure up there. That's my favorite. Some type of high volume area to the left. Okay. All right. So I'm glad we got that. What are you talking about? 99? You want me to give you a tutorial? I think we are here. This is what we're about. This is why we're doing this, Doug. So I'm not seeing a question there, but you can elaborate on your idea of tutorials. For paint. Oh, for paint. Yeah, man. Absolutely. Sure. I mean, this is the kind of, again, it's a really strong tool to use. Yeah, I don't think I'll give you the tutorial for free. You don't need to pay $99 for it. But if you come into the forum, I got a little thing on it for the Daily Trade Organizer. And I guess we can upload that latest version as well together. I might need to do that actually offline a little bit here. But if I come into Jim's Resources and Tools, I go to Daily Trade Organizer. And there's a condensed version of the. Okay, so this one will be replaced. I'll do that right away. And then you have the blank Daily Trade Organizer here. And you got a little video. It's about 1 minute and 30 seconds, just showing you basic stuff on the Windows Paint program just to use it. So let me drop that in there just in case. Yeah, all right, gotcha, buddy. So let's do this. So there we go. So we're looking at a tutorial here. It's a very short one. But you can certainly review this, what I just went through. And again, this is something that we'll have to put in the book to do more of for Windows Paint tutorials. I'm glad you brought that up, Doug, because we haven't covered this nearly enough. At least I've covered it on a basic level. It's a minute and a half, so you're only going to go so far with that. But I show you the basics of how to drop colors in. It's a great tool. We've had people try to make Excel sheets of this, but it just never quite worked out. I've been much more proficient loading in the colors. In that tutorial, I'll show you how to do that. And so, yeah, it's a very simple, super simple program. But again, I use it in a lot of various ways, and I try to show them. So they're parsed out through a lot of lessons. Unfortunately, it's not as organized. So maybe I'll have to take this last piece of what we just did, edit that out, and stick that below this one. Because I think it's valuable to see how you can drag objects around and such easily in Windows Paint. Again, it's a fantastically viable program when you really know it, and it works really, really well with the WSM Viewer. And that I'll demonstrate right here, since we're talking about the daily trade organizer at the end here. And just one last little thing. So we'll take this. This is our US dollar with the 5-minute, replacing the 1-minute chart, right? That's a 5-minute in there. And again, the Windows Paint feature is pretty simple. So let's grab the daily chart. So edit and paint. So watch what it does. It'll open up that screen in Windows Paint. And so I can take anything I want. Let's take Market Maker Cycle Drawing, which is probably sitting back behind here somewhere. Let's get rid of this. Get rid of this. Get rid of this. It's going to be one of these guys. Yeah, let's take that one. And so just a rough estimate here just to show you what's possible. So I'm just going to tighten this thing down, make it really tiny. I guess that's as tiny as I can make it. There are ways to make it tinier. I'll show you how to do that. So let's just say I do this. Okay, grab a picture. So what did I do? I use Snipping Tool, right? Snipping Tool is a general Windows program. Snipping Tool, I grabbed an object. Okay, I grabbed the Market Maker Cycle picture, and I've got this Windows Paint open from the WSM Viewer move I just did. Remember what I did with the WSM Viewer? I'll show you it again. But I'm just going to hit paste, and that drawing shows up. And so I can resize this to be, I'm going to make it 1/3 of the size as it was. And just stick it down there like that, right? Say that's what I want. I will press the Save button here. And then it'll show up in the WSM Viewer, but I have to save it. So Control-Shift-S is in SAM. And that creates the blue dot. So now I have that there. When I press the blue dot, that comes up. So what I did was I right-clicked on the viewer, and I went Edit in Paint, which is also Control-P. So I can go hold the Control button and then hit P. And again, it opens it up in Windows Paint. And you could add whatever else you wanted in here. Let's do a really tiny one just to challenge us here. Just again, for an example, added that and press the little floppy disk thing here. It'll shoot you back into the WSM Viewer, and there's your drawing. Control-Shift-S is in SAM. Saves the chart markup. Only on that one screen, though. Okay, so the blue dot shows up. That tells you have a marking in there. Okay? Thank you. You're welcome. Yeah, okay. So use that for check down. Okay, never been to the forum. So Doug, you haven't been to the forum? The forum has a lot of good stuff. I dropped that link in there for you. Just let me know that works. Hit that link right now and just let me know that do you even have credentials for the forum, Doug? I'm gonna make sure you're able to see this stuff. So the worst thing I could do is point, because you need to get to the forum basically from the main reason that I post all the videos of the pre-markets, and you've got the DMR videos in there. Think so, not sure. Okay. You got to, here, let's go back to our opening screen here. Grab this email here, DMR support at beatthemarketmaker.com. Email her if you need forum credentials, but you need to get in the forum to watch the videos. And you need to get into the forum to get access to the tools, all the indicators and all that. Nope, no longer Casey. Nope. So DMR support, beatthemarketmaker.com. Email there. And yeah, so very good. So, and again, when you come into the forum, the first thing I'd send you to is I'd send you to Jim's resources. No, I'd send you to Jim's DMR topic index and then new student suggested viewing order right here. And so I've got all these laid out for you. And each one of these you can click. There's a link there. But this is what I would have you start with. Scaled risk above the waterline. That's the most important lesson there is that a trader can know how to not blow your account ever again. And then how to scale your risk. So you're actually increasing your lot size as you're winning and you decrease your lot size as you're losing. And you're doing it in a non-linear way. So it's not like using a lot size calculator. You're actually going much lower and much higher than the calculators. But you're basically pressing your wins and you're pulling back during your losses. Then, of course, the peak formations, a bunch of lessons there. There's probably 20 videos here at least. Include the algo, that's probably 25 videos. So there's a lot of stuff here, but this is basically, I think, a condensed version of my take on Steve's method from late 2010 till current. So we're working on 13 years of exposure to it. This is my window into it to make it easier for you. Again, closing out where we started, the type 1 London patterns are not necessarily complicated. And because they aren't, some people are dissuaded from focusing on them because most of us come into this business thinking we need to make it complicated. And that's a sad thing because we really don't. It can be really simple. And as we showed in this session, we had a lot of London patterns that were super clear. Okay, so you took a screenshot. Screenshot is good. Make sure you take a screenshot of this. Grab that screenshot too, Doug. We want you in here full tilt. Don't be a wallflower. The webinars are great, but really you need the access to the past recordings. You need the access to the class. So it's a little mysterious that you haven't been in the forum, but that's all right. Get in there and then, should show you that as well. So I took you selfishly to my area, but that's all right. You get that. New student area was where you're going to see initially when you come into the forum. All right, let's go back to that. That's going to be this right here, new student, start here. And then you've got your BTMM course, which you have to be in the forum to see this. So this is great stuff. Okay, so there we go. In the forum you mentioned cars cluster of losses videos. Did you post that? Oh yeah, did I ever get that up there? That was our New Jersey meetup. Yeah, I gotta go dig that out. New Jersey meetup. Doesn't look like that's in there. Yeah, that's great, Adam. That was in our old forum. Our old forum got hacked. So let me take a note on that, because those are great. That's the I'll do mine too. I'll put both of our. I'll put Steve's up too. So that's the New Jersey meetup. I'll have to ask Steve if that's cool. It probably will be. But cars was phenomenal in terms of clusters of losses. So let me share the question, because I know it's rather rude for me to say the question without actually showing it. Oops, I went to the wrong screen. There we go. Okay. So you couldn't find that. So in the forum you mentioned cars cluster of losses videos. Did you post that? Yeah, I thought I did. I just don't. Let me just. Our meetup. All right, would have shown up. So where would that go? Yeah, that's worth putting in there, because it was a really good presentation of his. So maybe I'll put it. This wouldn't be bad on the Sunday sessions. I could put cars cluster. Maybe this will be where I put it. Okay, and then I go through a thing with the 1815 bond stop out idea, but that's not as. I'm going to make sure this stays with cars thing. I think that'd be easier. So watch for that, Adam. It'll be in the Sunday sessions. Right, so cars topic list is separate. I don't want to mess with that. Could put it in there. Sunday sessions, that's his thing. I'll treat it. Yeah, it's kind of like, yeah, I think that would be perfect. So I'm going to make a new heading down here. It'll be cars clusters of losses video that I've mentioned as a go-to video that's really powerful if you're still learning to be neutral when you take stops and when you're over projecting winners. Okay, great. Okay, excellent. So good productive night with you guys tonight. Remember, in these